their policy, how effective those policies are we together? They have interest in seeing the efficiency of the what of the policy of the policy enacted by what by them. Are we together? Are we together?
Yes.
Okay. So today we will be looking at business, the forms and structures of of what of business organizations. Where as business, you know what business is. Business happens to be an economic system with which transfer goods or services, or where there is what exchange of goods and what or services, where goods are being exchanged for what for cash. Like now, you as a business owner, you own your business for the sake of what? For you to what? For you to provide goods or services to the what? To the consumer in exchange for what? In exchange for money. Are we together? And the main focus of every business is to what? Is to make profit. Is to maximize what? Profit. Without profit, no business will what? Exist. Though the reward of a business owner who happens to be an entrepreneur is what? Is either profit or loss. Are we together? Because we see an entrepreneur as one of the what? One of the factor, one of the factors of what? Of production. Whereby we have four factors of productions, which include, can you name them? What are the factors of production we have?
We have labor,
We
capital,
have labor, capital,
land, and entrepreneur.
land, and entrepreneur. Those are the four classes of what? Four um factors of production. Are we together? So today quickly move down to the definition of business. What business is all about. Now we see business as an economic system where goods and services are exchanged for one another, whereby you exchange goods for goods. You know, we have situation whereby you can have a particular goods in, in order to what you can produce a particular product, and you exchange it with another what another product. Are we together?
Yes.
And also that's that's when trade by barter what trade by barter comes in. That is, you exchange goods for goods and services for what for services. You have a particular product and you are in need of something, then you can approach someone who needs what you have, someone who needs what you have, and also what and also can give what you need, who needs what you have, and also who has what you need. Then you people can reach a consensus, can reach an agreement of exchanging those things. That's when there is what exchange of goods for one another. Then what is invoked now is what exchange of goods for what for cash. You have your cash, then you get your goods. That's when you go to the market to to buy with cash. Then you have your product. Are we together? Also, it can be said to be a commercial entity that tends to make profit from its operation. That is, we see business as a commercial entity that tends to make profit from its operation. What's the operation? It depends on the kind of operation you engage in, you embark on. Are we together? Are we together? Are we together? Let me know if we are together or not.
Yes, we are.
Yes,
Good. Now, let's look at the characteristics of business. The characteristics of business include: one, the motive to be in business is to make profit. Everyone's motive of being in business is to what? Is to make profit. That's the first thing you need to know. Are we together? The first objective of being in business is to what? Is to make profit. Then the next thing is what? You make profit from your what? From business operation. You make profit. That is when you exchange your goods. After you've produced your goods, then you can now realize your profit from your operation. Are we together? Then the next thing is the reward for the risk invested in the business is the profit being made. The reward of you taking the risk is the what? Is the profit being earned by you. Are we together? Whereas the next one is that to make sure customer satisfaction are being granted for the survivor, so for the what? Survival of the business. For you to for your business to survive, you need to what? Satisfy your customer. Customer satisfaction is one of the priority of being in what? Being in business. Then the next one is all profits being made from the business belongs to the owner. That's one of the characteristics. That is, the profits being earned in the business belongs to the owner of the business. Are we together? Are we together?
Yes.
Then a business is to make sure it runs smoothly and neatly because of its what? Of its going concern. Are we together? Because of its going concern, so the business make sure is the operations are what? Are ongoing on daily what? On daily basis. Are we together? So those are the characteristics of business. Now, let's now the next thing is to what? Is to move to the what? To the classification or types of the business, types of our business. The first thing we will be looking at is um sole proprietorship. That is one man what? One man business. What do we mean by one man? We have three kinds of business. We have the sole proprietorship business, partnership business, and the what? And the limited liability what? Company. Those are the business entities we have. We have the sole proprietorship, partnership, and the what? Limited liability companies. Now let's pick it one after the other. Let's look at what what are those things we need to know when it comes to sole proprietorship. We also will be looking at um we also be looking at the partnership, those things we need to know when it comes to partnership business. Then the last one is the limited liability company. Now let's take the first one, sole proprietorship. When it comes to sole proprietorship, Proprietorship are enterprise owned exclusively by one natural person. They are business entities being owned by just one person. Are we together? That's why we call it a one man what? One man business. They are being owned by a single person, and in which there is no legal distinction between the owner and the business. So the owner and the business, they are being seen as the same thing, because anything that happens to be the business, we also what? We also affect the owner. Are we together? If the business is not running again, it means it will have adverse effect on the owner of the what? Of the business. Are we together? Are we together?
Yes.
So now let's look at now the entrepreneur exercises his activity without having created a distinction legal person. So under the law, under the law, there is no distinction between the business and the owner. Are we together? No distinction between the business and the owner, because once the business is not running again, or the business is in debt, it means the owner of the business and the owner of the business is always will also be in what? In debt. Are we together? Now let's look at the advantages of a sole proprietorship business. Number one is that it takes decisions what? Quickly, without consulting anything. Decision making in a sole proprietorship business is faster compared to what? Other types of business business and entities. It ensure that it ensure that it ensure that there is what? There is what? Privacy. There's always privacy in what? In a sole proprietorship business. You if it is not mandatory for the owner of the business to present financial statements, except if the owner wish to what? Wish to know if the business is making profit or not. And there is no need of presenting the what? Financial statements to any other person. Are we together? A sole proprietor is committed because the profit is entirely his own in case of success, and it depends on the business for his what? For his income. That is, a sole proprietorship business is committed. That's why a sole a sole proprietorship business owner will make sure that the business keep what? Keep running, because the profit belongs to the owner of the business. It is not regulated by special rules of law. You don't need any law for you to establish your business. Are we together? A sole proprietor a sole proprietorship business has no specific registration requirements, and uses the proprietor's legal identity. If you are to establish a sole proprietorship business, you don't need you don't need a special regulation for you to start. Are we together? You don't need any special this thing. You can start anytime at any point in time. So a sole proprietorship business can keep all business related information to themselves as the business only decision maker. So they have all the they have all the information on the what to themselves. Are we together? Are we together?
Yes.
Good. Now let's look at the disadvantages of a sole proprietorship business. One is that they have unlimited liabilities for debts as there's no legal distinction between the owner between private and business. So now what this one is saying is that in the event of liquidation, the business cannot continue its operation. Then the owner of the business is under obligation to sell his personal belongings in order to what? In order to settle the debt. Are we together? So it is under obligation that in the event of the winding up of the business, it is mandatory for the business owner to what? To use his personal money, to sell his personal property in settling what? In settling the debt. Now, finance available for expansion is limited to that which the sole trader can what? Can raise. That is for the business to grow. So it depends on what the owner of the business can raise. Are we together?
Yes, yes, yes.
Good. Now, the responsibility for making day-to-day business organizations is being determined by the what? By the sole proprietorship. Is being determined by the sole proprietorship. Then another thing is that the death of a part the death of the owner can lead to what? Can bring the end to the business. Non-existence of the owner can lead to what? To the end of the business. Are we getting it? Then the last one is retaining high caliber employees can be what? Can be difficult. Retaining what? High caliber employees can be what? Can be difficult for the what? Sole proprietorship, sole trader. It can be difficult, especially when the finance is not that what? That much. So sole proprietorship is common in retailing business, farming, personal services such as hairdressing, fashion designing, and others. So we know we can name we can all name the examples of a sole proprietorship business in case you are being asked. So can you just name one each of a sole proprietorship business?
Sorry, I didn't get the question. Can you come again, please?
I said, can you just name one example each of a sole proprietorship business? Do you understand? To you, just give me one example of a sole proprietorship business, you know.
Mm, most of these like shops in street that sells like provisions and all, yeah, that's an
Provision
example.
store,
Yeah.
provision store. The second person, oh yeah, no. One example from you. Um, oh yeah, no. What's your name? Mrs. Miss Mimi. May I get? Can I get your name, please? Your
My
actual
name is
name,
Mimidu.
Mimi Do.
Yeah.
Mimi Do.
And it,
So give
yes.
me. Can you give me one example of a sole trading business within your vicinity that you know?
Taylor.
Oh yeah, one example. A tailoring business. That's one. Hairdressing business. That's one. Um,
Barbing.
about barbing salon. So those are the examples of what of sole proprietorship business we can see all around. Even you establishing one, you can see that it is what when it comes to sole proprietorship business, a sole proprietorship business is easy to what to establish. For you to start the business is very what it is very easy. So let's quickly look at partnership business. Partnership is the coming together of two or more people who are called partners in order to carry out a business in which the major aim is to make profit. Are we together?
Yes.
Are we together?
Yes.
So partnership business can be seen as the coming together of two or more people who are called together to carry out a business in which the major aim is what? Is to is to make profits. Now, this profit, the business may also result in a loss, although the purpose is of what? Is of profit. So the business can also what? Can also realize loss. Are we together? Can also realize what? Loss. So are we together? Now, a partnership business. Now, the their coming together is voluntary, and the exit of a partner may also be what? May also be voluntary. That is, the coming together of the partners is voluntary, whereas the exit also is what? Is voluntary. It's not a do or die affair. Are we together?
Yes.
So a partnership business is governed by the law we known as what? Partnership Act 1890 and the Limited Partnership Act 19 1907. Are we together? Are we together?
Yes.
Good. Okay. So where are we? Hello. Hello, where are we? So now let's continue. Where are we?
Are still on partnership
On
business.
partnership. Now, so the partnership business is being governed by two laws. That is the Partnership Act 1890 and the Limited Partnership Act 1907. So, and the maximum number of partners, partnership business is two. Are we together? So the maximum number of people that can form a partnership business is 20. That's the maximum. The minimum is two. That is, it's it requires two to 20 people to what? To come together to form what? A partnership business. So once it's more than 20, then they can now start a limited liability what? Liability company. Are we together?
Yes, yes.
Good. Now, there is no maximum limit for professional firms such as accountants or solicitors who have received the approval of the law for this purpose. So when it comes to professional service, providers of professional service, there is no maximum what? Maximum number. So for people to come together to form a partnership business when it comes to professional service, are we together? Like more than 100 lawyers can come together to form a law firm, and it will be classified as what? As a partnership business. Are we together? A firm with more than 20 members would normally be incorporated as limited liability company. That is, once it's more than 20, then they need to what? They need to re-register their business to a limited liability company. A partnership business is formed under an agreement. Once there is agreement, but once there is no agreement, then we have a law that regulates partnership business. Are we together? And that law is actually what? Partnership Act 1890. Are we together? And under this Partnership Act 1890, the first one is that there will not be remuneration for partners. No remuneration for partners. That is, no remuneration to be paid to a what? To a partner. Another thing is that profit or losses are to be shared equally between what? Between partners or among what? Partners. Are we together? Then the next one is that an advance or loan made by a partner in excess of his agreed share of capital will attract interest of 5% per annum. That is, any advance that is beyond the agreed capital will must attract what? 5% interest. 5% interest per annum. Now, another thing is that there will no interest is allowed on capital and what? Current accounts. There will not be what? There will not be interest on capital and what? And current accounts. Now, it is now that an agreement is very important when it comes to what? Partnership business. If the partners should be rewarded according to their what? different contributions made. So now there should now be what? An agreement. There should be a consensus among the what? Among the partners. Now what are the what? What are those things they need to agree on? They need to agree on. The first one is they need to talk about the rate of interest to be paid on capital. Okay, how much are we paying? How much interest are we paying? Are we paying on what are we paying on the capital being contributed by what? By the partners. Are we getting it? Then the next one is what? The next one is to talk about remuneration to be paid to partners for services render. So they also need to talk about that. After then, the proportions in which profit or losses are to be shared. They need to all talk about the profit or losses sharing what? Sharing ratio. The next one is what? They need to talk about the amount of capital to be provided and maintained by each partner. Are we together? They need to talk about that. Then also the extent to which drawings are allowed and the rate of interest to be charged on drawings. They need to talk about drawings in the business. And in case there is drawings, the interest to be what? To be allowed to be charged on the what? On the drawings should be talked, should be what? Agreed upon, agreed on by the what? By the partners. There should be an agreement on all this. Are we getting it? Are we
Yes.
getting it? Good. Now, let's look at the capital accounts we have, the types of capital accounts we have. We have the fixed or flexible what? Flexible capital accounts. So let's look at what we mean by fixed. When it comes to fixed 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 capital account, that is, you you only create a single capital account, a single ledger for your capital account. So now when it now comes to flexible, that is, you created you created one ledger for a particular ledger for your capital account, then you also allow what? You also create another account for what? For current account. Let's look at it together. Now a partnership will often maintain a fixed amount of capital. There will be a fixed amount of capital. Under these circumstances, it is preferable that only an agreed capital ratio should be credited to a separate capital account for each partner. Now, all other transactions such as involving partners such as share of profit, interest, salary, drawings will be dealt with under the what? Under the current account. That's when the company um operates on flexible what? Flexible current account. But when it is fixed, you only open one account for capital accounts. So when we get to partnership accounts, you will understand this more. Now, let's look at the content of partnership agreement. Now, what do we mean by partnership agreement? Partnership agreement is a mutual agreement. Since the essence of partnership is mutual agreement, it is desirable for partners to come to some understanding before entering it into the what? Into the business, as the conditions upon which the business is to be carried on and their respective what? Right and power. Here, when it comes to partnership agreement, that's the what? That's the law guiding what? Guiding the partnership business. That is when there is what? There is a consensus between or among the partners. Now, content of partnership agreement include current account. That is, if current account are to bear what? Interest, and if so, at what? At what rate? Current account is just an additional account being created to 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 allow share of profit and other transactions, whereby there will be what? Fixed capital in a separate account. Are we together? So now a separate current account will now be created for what? Will be created. Now, partners remuneration. Whether partners are to be allowed a remuneration for their services before arriving at the visible profit. Now, there should be an agreement between the partners on remuneration to be given to partners who rendered what? Services to the what? To the business. And this will now be deducted from the profit, from the net profit before arriving at what? The visible what? The visible profit. Are we together? Are we together? But they are not limited to this. If so, the amount of the remuneration, they also need to discuss on the amount to be what? To be paid out. Do you understand? Share of profit also should be discussed among the what? Among the partners. Likewise, capital contribution should also be discussed. Accounting records should also be what? Should also be discussed. Valuation of goodwill. When it comes to goodwill, we are looking at the benefits being enjoyed by the what? By the business that makes it to what? To make more what? More profit. Are we together? So how will they value their what? Their goodwill. Though in accounting, inherent goodwill, that is goodwill, that is the goodwill being enjoyed by the business cannot be what? Cannot be quantified in accounting. So inherent goodwill and inherent goodwill is not allowed in accounting except purchase goodwill. And what do we mean by purchase goodwill? Purchase goodwill is the one that occur as a result of what? As a result of either merger and acquisition or purchase of the what? Of the business by another what? Another entity. Are we together? So how to now value this goodwill will now be determined by what? By the partners. Are we together? Are we together?
Yes.
Now, now let's look at the advantages of partnership business. What are the advantages we will be looking at when it comes to a partnership business? The first one is that decision making, decision making benefits from the combined wisdom of partners often lead often leading to more balanced and informed what? Informed decision. That is, there will always be consensus, coming together of ideas among the what? Among the partners. So ideas are being shared and decisions are being taken by the what? By the partners. Another one is easy access to what? To capital. They can easily what? Have access, more access to what? More access to capital. So another thing is large resources is involved in what? In partnership business. That is coming together of the partners involve large large what? Large resources. Then the last one is low cost of setting up. That is for you to set up partnership business, you don't need much what? Much money. Are we together? There will be what? Low cost of setting up. Then the last one is greater finance is to what? Partnership than what? Than sole proprietorship. That is when it comes to partnership business, they have accessibility to what? To more finance compared to sole proprietorship business. Are we together? So any question before we continue? Any question?
No question.
Okay, thank you. Now let's quickly look at the disadvantages of partnership business. As we have advantages, there will always be what? Disadvantages. Are we together? So what are the disadvantages of what? Of partnership business? The first one is what? Potential for what? Conflict. There will always be conflict. Are we together? There will always be conflict. Partnership business, like most relationships, can quickly can quickly can quickly become complicated when associates disagree. Once there is a disagreement between the partners, so it will be more complicated. Are we getting it? The death and bankruptcy of a partner may lead to the dissolution of the business. Are we together? That one is straightforward. That is, once there is either death or bankruptcy of a partner, it will actually lead to the what? To the dissolution of the business. Now another thing is that the partners the partners have equal decision power. When it comes to partnership business, they all have equal what? Equal decision power. No one can what? No one um can make decision outside without the permission of the others, without informing other partners. Are we together? The amount of capital, the amount of capital the partners can raise may still not may not still be may not be enough for them to carry out large investment. The amount of capital involved may not be what? May not be enough for them to engage a bigger investment. The liability of the partners for the debts of the business is unlimited, like sole proprietorship business. So the liability of the partners may not be what? May not be limited. That is, the liabilities are unlimited. Now let's quickly move on to limited liability company. Now, a limited liability company is a business structure that offers limited liability protection and pass through what? Taxation. That is, when it comes to limited liability company, they have what? Limited liability protection. That is, your you can only lose the amount you contribute to the business. That is, the liability of um investors investors is limited to what has been contributed by the what? By the investors. Are we together? You can only lose what you've invested in the business, not that when it's time to what? When it's time to settle liabilities, you can't you can't you can't um go extra mile in what? In selling your in using your own personal what? Addition In using your personal money to settle the what? To settle the company's liability. Are we together? Are we together? Now, limited liability company legally exists as a separate entity from its owner. That is, when it comes to limited liability companies are being seen as being separate from its what? From its owner. The owner apart, the business apart. Business is being seen as human being, different from its what? Different from its owner. Therefore, owner cannot typically be held personally responsible for the business debt and liabilities. So the owners cannot be what? Held responsible for the business debt and liability. The attraction of this form of this business of business enterprise is its access to what? Capital larger. Is its access to capital larger than what its promoters can what? Can provide. That is, the accessibility of a limited liability company to um more finance is what? Is higher compared to other types of what? Other types of business entities. It can sue and be sued in its name and enter into contract for which it is solely what? Liable. That is, you can sue a limited liability company using its name, not the owner. Are we together? Are we together?
Yes.
So now let's quickly look at the types of companies we have. We have company limited by shares, companies limited by guarantee, and unlimited company. Now, before then, we also have another classification being seen as being seen as private company and what? And public what? Public company. Now, how do we know the difference between a private company and a public company? Now, a private company will always have limited. LNTD. Once you see LTD, just know that the business is what? Is a limited liability what? Company. And is a type of business held by what? By small business entity. Are we together? Now, this type of business entity limit owner liability to what? To their shares. It limits the owner's liability to their share, the amount contributed, invested by the owners of the business. Those are the investors of the business. So, and also they have limited numbers of shareholders to be 50. They have limited number of shareholders to what? To 50. That's the maximum. Are we together? Are we together?
Yes.
Good. Now, this type of business, okay, I've talked about that, and restricts the shareholders from publicly trading shares. That is, you cannot transfer your what? Your shares to another person without the consent of other shareholders. Are we together? Now let's look at public limited liability company. Public limited liability company is a company that is legally allowed to offer its shares for sale to the what? To the public. That is, when it comes to public limited liability company, they are being allowed to what? To offer their shares to the public. So you can transfer your share without even consulting anybody. Are we together?
Yes.
Good. So without you consulting anyone, you can easily transfer your shares. Now, they don't, I can't see this. So they don't have to offer shares to the public. I can't see. Let's quickly look at the advantages of a limited liability company. What are the advantages of a limited liability company? One, the first one is that is a separate legal entity distinct from its what? From its owner. That is, the business apart, the owners apart. It can sue and be sued in its what? In its name. That is, you can sue the business, and the business can also what? Sue using its what? Using its name. Are we together? No wahala. Hello, are you there?
Yes, I'm here.
I'm sorry for my I don't know what happened to my phone. I mistakenly end the class. So I'm back.
All right.
So can you see my screen?
No, not yet.
Okay. Can you see my screen?
No, I can't.
So can you see it now?
Yes, I can.
Okay. So now let's quickly look at the advantages of a limited liability company. So very soon we will be moving after this topic. We will be looking at the classification of transactions we have, how transactions start for a business entity. How do we record the business what transactions? Are we together? What are the steps involved in recording our what transactions on a daily what on a daily basis? So all this will be looked at as we move on. Are we together? So now let's quickly look at the advantages of a limited liability company. Now the first one is that it is a separate entity distinct from its owner. That is, those people managing the business and the owners of the business, they are separate from each other. The business alone is a separate entity from its owner. The owner of the business cannot just the as an investor, you having your investment in the business, you cannot just wake up in a day and said you want to have uh you want to do some you want to you cannot just make a decision without the consent of others. Are we together? You only invest your money in the business. So it is now the business that it's like you borrowing the business your money. So you are an entity, whereas the business also is an entity on its own. Are we together? So the next one is that limited liability company offer more privacy than corporations who do, because they don't have to disclose their ownership structure publicly. So when it comes to limited liability company, there is more privacy. It's not all the information you have that will be displayed to the public. Are we clear? Shares in a public company can be transferred without the consent of other members. When it comes to public limited liability company, you can easily transfer your shares without seeking the consent of others. Now, investors are free. Generally speaking, large investors favor investing in companies over what LL limited liability companies. Now, another one is um forming a limited liability company add credibility to the business by showing clients, suppliers, and potential investors that the business is what is a legitimate and serious entity. That is, it adds more credibility. That is, it brings it people can what people can people can easily invest into the business by bringing their resources. So having a limited liability company, it invites more people to invest into the what? Into the business. Then disadvantages of limited liability company. Number one is that limited liability company has limits. That's based on private, whereas the public own does not have what? Limits. It's unlimited. Like, let's take for instance, those companies with PLC. Let's take Zenith Bank for example. You know, Zenith Bank happens to be a public limited liability company. So you can just sit down at home and invest your money in what? In Zenith Bank without meeting other what? Without you meeting other shareholders. Your own is what you are expecting at the end of the period is your return on your investment, which is what? Which is your dividend. Are we together? So it adds credibility to the what? To the um to the business. Now let's look at disadvantages of limited liability company. Number one is that limited liability has limits. That's the first one. Another one is that, especially the private limited liability company, which has a maximum limit of 20 people. Then self-employment tax. There is self-employment tax when it comes to limited liability company. Consequence Consequences of member turnover. We have large people. Personal liability protection is also there. Then corporate taxes are usually bypassed when it comes to limited liability company. Then also difficulty to transfer ownership. That's for private when it comes to private limited liability company. Now, let's look at the formation procedure. The formation procedure. The name proposed by the promoter of a business has to be searched for and approved by the Corporate Affairs Commission. That is the promoter, the person who happens to be the promoter of the business. We have to search for the name, and the approval will be from Corporate Affairs Commission. Are we together? So which must be utilized within 60 days. Otherwise, the name has to be what? Revalidated. So if the name has not been what? Utilized, once you do not take other steps after 60 days, then the name will have to be revalidated by the what? By the Corporate Affairs Commission. So another one is that this is to ensure that the entity's proposed name does not bear resemblance of already existing names and do not cause confusion. It's mainly for the sake of confusion. So you need to search for names before you what? Before you select the business what? The business name. Their fees must be paid for the existence of a limited liability company. There is a particular fee that must be paid, and it must be paid to the what? To the registrar of a corporate affairs commission, to CAC. Now, statutory book. What are the statutory books involved? Statutory book happens to be type of book in which all official legal related matters and statutory matters about the company are being what? Are being kept. Those are the that's the book that allow um all statutory and legal matters that in which all statutory and legal matters are being what? about the companies are being kept. And what are the statutory book we will be looking at? Number one, the register of the company's member. That's the information relating to the members of the company. The accounting records, that's the financial statements. Register of um directors shares and debentures. We have to look at directors investment in the company. The register of charges registered against the what? Against the company. List of charges that has been raised against the what? Against the company. Also the register of directors and what? And the secretaries will also be what? Will also be part of the what? Part of the company's statutory book record. Now we have redeemable preference shares. Under redeemable preference shares, redeemable preference shares allow for the repayment of the principal share capital to shareholders. It allows the repayment of principal share capital to the what? To the owners. Now the company may redeem these shares at an agreed value on a specified date at the discretion of the directors. So when it comes to redeemable preference shares, you have access to your to your investment, to the amount you invested in the business, and it will always be at the discretion of the what? Of the directors. The time to be what? To redeem the money. This is on the condition that the company is what? Oh, I can't see again. Now let's look at participating preference shares. Participating preference shares are type of preference and preferred shares with special rights to participate in the surplus profit in the event of what? Of liquidation after all shareholders have been what? Have been paid. That is when it comes to preference shareholders, you still have the privilege to what? To additional profit when other shareholders are being what? Are being settled. The shareholders will receive These shareholders will receive a fixed rate of dividend and also share in the company's what? Extra earnings. They will receive a fixed amount of what? Dividend. They are there to receive a fixed amount of dividend. Then also they have rights to extra earnings after all shareholders are being what? Are being settled. Then we also have ordinary shares, also known as common shares. They are shares of a company that give the shareholders the right to vote in the what? In the company's meeting. It gives These ones give the owners the privilege to participate, to vote in the during the company's what? Company's general meeting. And also an income in form of dividend from the what? From the company's profit. You also have privilege to the company's profit. So that's part of it. A now let's look at not non-for-profit making organization. Non-for-profit making organization, they are organization group, they are group organized for the purpose other than what? Generating profit, and in which no part of the organization's income is distributed to its members, directors or officers. Here they don't receive dividend, unlike other what? Other um unlike other this thing other other um business organization. So here you can only contribute your money without you expecting any what? Any return. Are we together? It's a voluntary what? It's a voluntary organization. Now, a goal can still be pursued even when the cost outweigh the benefit provided. Such goals will add value to the intended beneficiaries. So here, they can spend more than what they have. They can spend what? More than what they have. Because at the end of the period, either the income is when the income is higher than than the cost, and they have the realized profit, the profit being earned is not coming to it's not coming back to the to people who contribute the the money. Are we together? This money is not coming back to those people who provide the what? The money. So and we have two types of not for profit entities. Number one, we have the government entities and we have non-governmental entities. When it comes to government entities, that one is being closely affiliated to the what? To the government. That is, the ownership and the control belongs to the government. Now, here, a governmental entity is that which is closely affiliated, generally by the government ownership or control, with state and local government. Among the agencies of government are public corporations. We have public corporations like um the water corporations, railway corporations and others. So they are being owned and controlled by the what? By the government. Their ownership and control is from the government. Now, the ministers and commissioner acting on behalf of the federal or state government appoint the members of the board, who in turn formulate policies within the enabling act, establishing the what? The corporation and the framework. Now, it is now people who are being selected by the commissioner on behalf of the federal or state government. They will be the one to formulate the policies, the policy of this what? Of this organization. Are we together? Are we together? So, what are the characteristics of governmental entities? They provide goods and services for the benefit of the community. Their own is to provide goods and services for the what? For the sake of the community. They provide I'm coming. They provide goods and services for the what? For the benefit of the community. People within the community, they are the beneficiaries of the services being provided by the governmental entities. Now, the rights, powers and responsibilities of the entities are derived from the constitution or the law settling what? Settling them. So the power and the responsibility are being generated by the constitution governing the entity. They operate with money raised from tax. So their own source of finance will be from the tax provided by the people within the community. Are we together? The requirement for public accountability by the operator. There is what? There is need for public accountability by the people managing the what? Managing the organization. Then, by their nature, profit maximization is not the major objective. They are not there to make what? To make profit, except to provide relevant services to the what? To the people within the community. Take for instance, um, give me example of any public government entities you know. Entity you know. Or yeah, any government entity, any government entity you know. I'm with you.
NAFDAC.
We have what?
NAFDAC.
NAFDAC. NAFDAC is being owned by the government. Are we together? NAFDAC
Yeah.
is being owned by the government. So it is the government that control what? NAFDAC. Yeah. And they are there to what? To make sure fake drugs are not being what? Are not being used by the what? By the members of the community. They make laws to what? To make sure good products and services, good products are being what? Are being produced within what? Within Nigeria. Is that not their what? Their work?
Yes.
So that's one of the. Are they there to what? To make profits when they operate.
No.
Their establishment is not to make profits. Are we together? Now let's quickly run through the non-governmental entity. Non-governmental entities are voluntary group of organizations, usually not affiliated by with any government, but they are formed to provide services or for to advocate a public what policy. They include religious, charitable, social entities. Now they are not affiliated to the what? To the government. Now advantages of them include some activities. Okay, here is the advantages of government entities. Some activities such as generation of electricity, provision of port service facilities and rail transport services involve huge financial outlay, which the private entrepreneurs cannot what? Cannot provide. So it is only through the government that those finances can be what? Can be gotten. So the source of finance under the governmental entity is through what? Is from the government. Is from the money raised generated from tax, in which individual cannot what? Cannot afford. Are we together? It enables some natural resources, especially minerals, to be efficiently exploited and effectively what? Managed. It enables mineral resources to be what? To be efficiently and effectively what? Managed. So without government being support, then all these mineral resources will be what? Will not be managed well by individuals. Some essential goods or services, if left in the private of individuals, may not be provided may be provided may not be provided in sufficient quantity, that is, or may be what? Provided at exorbitant what? prices. That is when it comes to um for government entities. The goods being provided by them or the services, if they are being provided by what? By individual, it will be at what? At higher prices. Are we together? Those prices will be at higher what? At higher prices. Let's take for instance, um which public, okay, let's take for instance this light of a thing when it was being when it was fully owned by the government, when it was being when it was owned by the government, you can see that the amount being paid by individuals within the country then, before the transfer of ownership, it was minimal. It was minimal compared to when it is now being controlled by private entities. Are we together? Hello, are we together?
Yes.
As you can see, when NEPA was being owned by the government, the the prices being the money being paid by individual is what? Is not much. But when individuals take control, what happen? Talk now. What are we experiencing now? People pay a lot. Is that not what is happening now?
I didn't get you.
Eh?
I said I didn't get you. Sorry.
I said when electricity company, the electricity distribution company was under government control, the what was paid then is the amount being paid by individual, by household, was not much. What was paid then is not that much on monthly basis. But now, what happened? People are now paying higher. Though though the electricity distribution company is still government still have a little ownership. Is not fully owned by the what? By private organizations. Are we together? But you can
Yes.
compare the prices then. When you compare the prices then, the price then to now, you can see the difference. Yes or no? It is now
Yes.
that we now have band A, band B, band H. Is that not it?
Yeah.
So you can see the difference. Now, the public company can borrow money externally by issuing bonds or loan notes, which is not possible when it comes to private sector. When it is being owned by what? By private organization. Government can easily what? Issue out bonds, treasury bonds, treasury notes rather, to the public to what? To subscribe to, in case there is need. Are we together? Now, there are disadvantages. What are the disadvantages of this? The major disadvantage of public sector enterprise is that members of the board are political appointees. They are what? Political appointees who control and manage the what? And manage the the corporation. That is, those people who manages this, the the public organization, they are being appointed, n- not on experience or expertise, but on political what? On political level. Are we together? On what? Political level. Another thing is that the performance of public sector entities is poor when compared with private what? Private sector. That is, when it comes to private sector, the performance of public organizations are poor. You cannot not get you can't compare a a government a government hospital with a private hospital. The services being rendered in a public hospital to that of a private. Can you compare it? So when it comes to public entities, the management is always what? The performance is always poor. People do anyhow. But when it comes to private, they render the best service, because the aim is to what? The aim is to make profits, is to maximize what? Profits, by rendering a good value, by giving a good value to their what? To their customer. Are we together? So most of the public sector entities are being run at a loss, as the motive for establishing them is not for profit. So they are being run at a loss. That is, the revenue being earned is the revenue earned are always lower than the what? Than the cost incurred. The last one is that they receive subventions from government without commensurate without commensurate service to the what? To the people. So they get their subvention from government, which cannot what? Commensurate the value being rendered to the public. So here we come to the end of the class. So any question? Oh, any
I don't
question?
have questions right now.
So next class we'll be moving on to the next topic. The notes are they've shared the notes on the platform. Are we together? The note has been shared on the platform. So we'll
Okay.
move to the next topic. So from there, God will help us. We'll be able to finish the syllabus for this diet. So
Okay.
thank you for joining.
Thank you.
So let's see how it goes next week. So can we? When do you think we can pick during the week for the weekly class? Hello, are you there? Hello,
Yes. Um,
which of the days do
I
you think we can pick?
Um, Wednesday.
On Wednesday. Time. That will be in the evening. Oh.
Wednesday evening. Night.
Yeah. Hmm? Wednesday evening. What time should we pick? 8 to 10, 7 to 9. That 6 to the 8 cannot be possible.
No, not 6 to 8.
So when
8.
should we pick?
From like 8. 8 to 10. Right.
8 to 10. No wala. So I will inform the admin to create the link while we have the
Alright.
class. Thank you very much for joining.
Alright, thank you.
So enjoy the rest of the weekend.
Thank you.
You're welcome.